on the editor's radar. A lot of those new age tech companies certainly in the spotlight, and that after Paytm came out with their overall numbers, the fact that it really pleased the street, the fact that they hit that operational profitability ahead of the September guidance. And Nikunj, in line with this, we've seen some of the commentary from the other new age tech companies like Zomato talking about hitting profitability. Nkaa has been profitable, but they're going to sustain costs up 10%. They clearly now may be coming back into favor.
So I want to start first with Paytm, because that in a sense is really the occupying the center stage, so to speak.
The Macquarie report.
Why is this report important? Because they were the first one who came out with a massive downgrade on the stock when it went public. Guess what, guys? Macquarie has changed their view on Paytm. Now they've maintained a very bearish view on Paytm throughout its listed journey. But now Macquarie, this morning, a mail has hit my mailbox. That's 8th of February. 800 target price. That means it's a double upgrade. The point what they are making now is that our view at 2100 was based when the circumstances were different and the price was different. The price has changed. The business environment is looking strong. They are growing. We looked at the Jan data also, which just got released in the morning. And now there is a clear commitment towards path to profitability, and minus their UPI business, their payment business, other businesses are also showing signs of signs of growth. So there is merit in now re-looking at Paytm the way we've really looked at Paytm in last quarter. The challenge for Paytm, what I see, Avan, is that there is supply. There is supply from Alibaba, there is supply from SoftBank. You've got large P investors and large marquee investors who've been selling every time the anchor lock-in is getting out. And we've seen that in yesterday's intraday graph also. Look at the Paytm stock yesterday. It was flying, cruising smartly, but then comes the intraday move. Zomato goes up, Paytm comes down. So I think Paytm now qualifies as a stock where markets are convinced that the path to profitability is there. It's a judgment call at what price you want to buy, but this is a stock where everybody was selling at every price irrespective of the decline. Now will be a stock where you want to hold or you want to buy on a decline.
Okay, that's Macquarie completely changing its stance on Paytm. Watch out for that stock in trade, but then we're also discussing InfoEdge in closer detail as well. And incidentally, it's Macquarie as well that has come out with their report talking about the sum of parts for InfoEdge.
Okay, now InfoEdge, if you look at the sum of part, that's what you look at it. And sum of part, just to break it for our viewers, essentially means that when you value a business, how do you price it? For example, with Reliance, you value Reliance with different businesses, Geo, refining business, the retail business. For Macquarie, for InfoEdge, 50% comes from the basic business, which is the jobs business. But the remaining part of the sum of part valuation for InfoEdge really comes because of the investments they have done. And two large investments there, both of them have gone public, Zomato and PB Fintech. My limited point is that if the new age stocks are making a comeback, the sum of part valuation for InfoEdge, given that large part of that, nearly 25%, is still getting derived from Zomato and PB Fintech, and there are some other businesses they've incubated, will change. The stock got re-rated in 2020 and 2021 because of the surge what we saw in some of the fintech and new tech companies. Now I think the de-rating which has happened after the crash and collapse in the stock price of some of these new tech and fintech companies, that's behind us. So if some of the new tech and fintech companies, they start making a comeback, I will not be surprised that the sum of the part valuation for InfoEdge will start changing. This may not be the wonder boy for the day, but incrementally going forward, I think markets will start recognizing that.
Okay, there you have it. So largely focusing on some of those new age tech companies. And Pankaj Murarka as well has been pretty bullish and been acquiring some of these companies, Anisha. So let's find out his take on the entire basket. Oh, well, yes.